Hey everyone, welcome to your daily update for SOL and BTC. It's been a very flat weekend with a lot of close proximity liquidity getting generated. So, yeah, people have been opening positions, high risk, high leverage, really close to current price, which is kind of exactly what big players want. So, moving into any form of catalyst, market events, or even just a market open next week, they're going to look to take one side of that and then push it in the other direction. So trying to figure out which way they're going to go first is often the hardest part, but the levels are there. So looking at the 1 day BTC, it's just very clear now. There's just that cluster up to 16800, and down to 14, down to that 1400 again, and then that next cluster is down into the 112 sort of levels, and if it pushes higher it would sort of be up to that 118 level. So it's just plainly matching up with all of the pending structure. So more or less none of the longs have been completed, none of the shorts have been completed. It's just traveling sideways, but I think it won't be long and you'll see both sides of the equation get taken. For SOL, that's same sort of thing, but sort of up to about that 244, which would be your top side daily resistance, and down to around that 232. The only thing I'm starting to see, though, and we'll see this when we start to look at the charts, is they might build additional hold levels at lower price points, which means they're going to leave, potentially leave some of this top side behind and then just continue down and try to basically take out some even lower levels. So looking at the 7 day, 7 day is very even now across the board. So basically they could be taking anything down into those 220s or anything up into that sort of 250 area. And if we, on BTC, that pretty much still just lines up with that same 112, 500-ish to the downside, and 118, 900-ish to the upside. And if we look at the 30-day, it's not till you get to the 30-day that there's still a bit more bias towards longs. So I think it would make sense to be going down and taking some of that. Whether they take all of it, it's hard to say, but some of the structure is getting very bearish, particularly on BTC. And yeah, you could, it's definitely looking like it could take one heck of a dump. So we'll see how these closes play out today. But basically, we needed a decent move to the upside, and we needed to hold a higher price if we wanted to get around going down. More and more, it's just looking like it's going to go down. So let's have a look at the very sideways weekend liquidity. So as you can see, it's just getting very dense top and bottom on BTC. SOL has taken a little bit to the downside, and as soon as it does that, people are opening up these shorts, and as you can see, the price is just traveling up to them. The only thing on SOL that sort of makes me wonder if it's going to leave behind some of this topside liquidity is just that there's a lot of gaps in here now. So if we don't start to see it push up past 240, then it's probably going to create hold levels and then just take everything more to the downside than the upside. So yeah, and BTC, it just seems like it's a matter of time before it takes everything that's on here, all this dense red stuff in both directions. The real question is whether it actually stops at 114s and then has a bounce, or whether there's just so many people who are going to long 114 that as soon as the price enters that, do we suddenly see a whole bunch of liquidity appearing down here below 113, in between 113 and 112? And if that's the case, then you just get that cascading effect of it going down. So, but yeah, the weekend has literally just been sideways. If you've been in the Discord and watched some of the stuff that's been pasted, the candle closes have just been engineered to just keep the price stuck between trends, not really breaking them, not really, able to go up, not able to go down, just kind of getting held. And we've got targets up here into this upper area which are in play, and we've got targets into this lower area that are in play, and just none of them are getting fulfilled because they're just trying to get more people to place bets and enter the market, which overall is a positive thing because it means that there are some big players who are about to enter. First, they've got to get all the liquidity in, then they use the liquidations to limit the spread to enter really big positions to then move in the opposite direction. The only thing is we don't know which way first, so it could be a move up to open some large positions and then a very big push down, or it could be a push down, they'll open their really large longs, and then it could be a big move up. So we're just still waiting to see which way resolves first. Okay, let's have a look at these charts. So SOL BTC, we've got the hold level which has not been tested. It's basically just rejected off the trends. It hasn't been able to make it back to the 21024. If it closes like you see it now, then you'll get another hold level appearing in here at 20625, and then that can reject off that and just keep on traveling further down. Really, it comes down to the size of the wick, which is the same in pretty much every case. The trend support will shift to the underside of this candle if it closes blue, but as you can see, even where it closes here now, which is around that 20570 area, it can just open on the other side. Where this gets a little tricky is if it opens on the other side, then it basically could just hit the next trend straight away and then push back up into the hold. So the move could be quite quick. It could go down, up, reject, and then break down. But what we're pretty much starting to see is we're starting to see a lot of resistance. So whereas we'd pretty much hit our monthly resistance, if we look at SOL BTC on the monthly, we'd hit our monthly resistance up here a couple of times, and we're starting to see the price start to build now. If we look at the weekly, we're seeing it reject on the weekly under the range trend, and we're seeing it build daily resistance and not go back up to the actual hold levels. So, for price to break a downtrend, it has to hit a hold level, it has to hit a break level, and pretty much what we're seeing here now is we're seeing all the way from the very top here, we're seeing it didn't quite hit the break level, stopped short, and then we're seeing daily resistance getting built, not getting tested, maybe now some new daily resistance. If this was to close up, so let's say it doesn't create this hold level and it goes to somewhere between these two numbers. So somewhere between, where are we on the top side there? 20701 on the top and 20625. So if it closes into that gap, but still closes blue, then shifts the trend to the underside, it will be high enough, the trend shift, or high enough above the trend shift to bounce off the trend and potentially come up here and target that. And that might be that push to take topside liquidity. But in my opinion, that could actually be a little bearish, really, because if they take that topside first, it probably means they're just going to have a bigger dump, afterwards. And really, they should be having a dump because they're in monthly resistance, so I can't blame them. So, now, looking at the strength assets. So strength assets are in a position where they're not going to shift the downtrend. They are holding the uptrend, and this uptrend is basically getting stronger. So which is a bad thing, obviously, for risk assets. But it's if it is to close like you see it here, then it can bounce off the top side of the support trend again. It'll be on the appropriate side of the downtrend to basically be able to come up and test the break levels or the next trend to the upside. So it looks like it is trying to push its way back to that 64.46 or higher area. But it's also one of those instances where it's on the correct side of a trend to go up, doesn't mean it does. And this is, they could just apply pressure, or in this case, put money flow into the alts and actually bring it down first. It could test any of these lower levels before it goes up, but as it stands, the break level for this interior daily range is down here at 63.55. The bigger range that's sort of wrapping around it is 63.41. If it doesn't come down and hit these break levels, it's not going down, in which case we're getting a reversal. And if we are seeing a reversal, then pretty much you're going to see a dump in risk assets. So that's looking like the story it's telling. Over on the weekly, you can see it has hit the break level on the weekly, but it's come back up and it's closed inside. So this will shift the weekly trend today, and that weekly trend will shift to the top side. So what we have here is a situation where if it shifts like this to the top, I mean, this could close blue obviously and not shift the trend, but if it was to shift to the top side like this, the scenarios are you could get a trend rejection back down to the bottom, but we shifted this trend to the bottom side last week. We haven't actually tested it yet. We built a range trend in here on the weekly, and we haven't tested that yet. So effectively, there is a lot of reason for the weekly to bounce if it comes down into this area. And so anything between sort of 63.4 and 62.9, sort of in that area, there are plenty of reasons for the price to actually go back up on a weekly scale. So it just really does look like we are heading into some kind of altcoin pullback or dump, basically. And I think regardless of whether it moves this trend today or not, the only real way for this to get bearish is for us to have some real sudden dump. And when I say bearish, I mean bearish on safety assets. For some big dump down and below this whole 62 area in the next couple of hours, and that would take a pretty special tweet, I'd say. So it's more likely, I think, you might get some temporary upside to this, or temporary downside. I mean, it's a 1 week candle, so closing here and rejecting off the trend, it could push all the way down and give you that little bit of a pump in alts. But within the next 7 days, it's almost certain that it reverses and travels in the other direction. So, yeah, this is looking pretty nasty for the altcoins, really. Over on the monthly, which we don't close for another 9 days, but just worth pointing out that the actual trend on the monthly is not broken. It's the prices come from the top side of it. So this could actually come all the way back up into the 68 area. And that would just be heading back up to trend to do a test of an unbroken trend. Also, the wick on the bottom side of this monthly candle means that if it stays in the same sort of area or closes blue, the monthly trend will shift to the downside. And I don't want to come across as saying this could mean end of cycle, but it really actually could mean end of cycle. If this monthly trend shifts to the bottom side of this and we bounce off that trend, then the hold level is back up there in that 70% area. So yeah, that just this in itself is actually a pretty good indication that we're kind of on the fence of saying bye-bye and end of cycle and no more altcoins going up and everything dumping. The other alternative to this is in 9 days it can come down and close with no wick, be on the underside of the new trend, and then it can dump. And it's pretty much all of the origin levels, all of the really big support levels start at about 60%. So it's coming down to these levels down here is sort of my expectation for the end of the market as far as alt season goes. But it's looking like it could definitely, have a pretty good shot at ending it just in this if it really wants to. We're still going to be in the monthly uptrend for safety assets unless we actually hard close below those 59% levels. So trying to remember where that was now. There, and then it moved to there. Yep, so there it is. Okay, let's have a look at totals. Wasn't that just a thing? So totals on the daily, just a wicked doji, basically. This does absolutely nothing. It's not breaking down. It's not breaking the trends to the upside. Yeah, it will not create any shift of support or resistance. So let's ignore that one. Looking at it from this perspective, it's just on the fence of creating a hold level. It's also going to shift potentially the support trend. So this is where what we're sort of seeing at the moment is more of a selective, we're seeing selective shift in market cap. So we've had things like World Liberty Finance, which had that pump that we spoke about the other day. There's this new BNB DEX token that's been flying. There's a few out there actually. There's some other big DEX tokens that have been going. Most of it's been focused on the BNB chain, and I think what else? Grass. All sorts actually. There's been a few, but the sort of selected tokens have been going up, which is sort of affecting the overall market cap structure. But then when it's not everything, so it's not quite like what you'd expect alt season to be, where everything flies. What we're sort of seeing is just some things are getting money rotation from others, and this is what this is showing is that we will get that shift to there. We may or may not make this hold level, and it's really just teasing. So there is quite a big difference between what can happen if this closes. Something just triggered my alert. If something closes above that 3.73 area and doesn't create that hold level, I mean, if it flipped to the upside, then that's ultimately really positive, because if it was to go to, say, above 3.74, so and made a yellow candle, then effectively we would be shifting a trend. We would be looking to target that 3.78 area. That's kind of a pump. Could happen in the next 2 hours. But basically, if it was to close to the downside, it would open onto the new support trend, and then because it's such a tight little area like that, the support trend could push it back up still. So we do see that, and that's how fib trades get invalidated. They basically just open the engulfment, smack into the trend, and the trend pushes the other way. And because it's always just a case of one of the two will win, either the horizontal will break or the diagonal will break. If it closed up, didn't create the hold, it could bounce the trend, travel up to the top side there. So there's a few things that this could do, but at this stage, you're not really going to know until close, because it's just sitting on the fence. If we look at the weekly, and the weekly has pulled back underneath the global resistance. So this is actually it's basically stuck in a wedge between two ranges. So you've got this range, which is running up here, which is basically that block of 4 candles there. And then you've got this range trend here, which is a slightly different range trend made by the fact that the hold level was left behind and then revisited. So that creates this wedge, and which is basically your decision time. We're going to either break to the top side or the bottom side of this. And as it currently looks, it looks like it's going to open, based on the gaps, on the wrong side of the support. And then you've got your normal trend support, which is coming through a wee bit lower down. And you've got the possibility of a retest of this trend running through here. And then you've got another range trend running all the way through here. So effectively, if this opens on the wrong side, rejects off this point, it could spend 7 days sweeping all the way down here, liquidating all the longs, and then it could bounce back up. And that's entirely possible. And you often do see when wedges like this fail, you do often see them take liquidity to one side and then reverse in the other direction, because it's not failed until it hard closes. And given it's a weekly scale, it gives them 7 days to wipe out longs and then go up. So that's pretty much what the entire market cap of risk assets is thinking about doing right now. It's which way does it go? Now, if this was to get up and over top of the global resistance and close above this 3.75-ish area, the next candle could open on the top side of that and bounce. And that would be very bullish. I mean, the entire market of risk assets would probably just fly up, but it has hit the break level to the top side. And at this stage, it has not hit the break level in this range here, which has been the last 2 weeks. And very subtly, it has not hit the break level either for the previous accumulation range. So this is more stacked for a breakout to the upside because it's already tested those upside levels. But it looks like it might be thinking, well, let's go down first before we go up. So, right, enough on totals. Let's look at Bitcoin. So, Bitcoin. Well, it's bouncing off the backside of the downtrend. It looks like it might create another resistance hold level. So if it does, that's about 115,578. It looks like it may shift the trend. Oops, not that one. This one. And it may open on the wrong side of it even. So really, the next trend down is pretty close. There's an untested range trend down here. The levels I'm really interested in is the 114 levels, obviously, because they've been historically very good strength. But I'm also quite interested to see whether they utilize that to manipulate people. And if everyone opens those orders in the 114s, then why would they not go down here and retest these broken range levels, etc. down here? Because all of these are waiting on retests, and they line up with the next layer of the trends. They could wick all the way down here, take everything, retest the levels that have been hard closed in the 112s, and then go up from there. And really, that's just daily structure. So, and all of this is just a blip inside some of the bigger stuff right now. And some of the bigger stuff is actually looking pretty free to dump. So, I don't think we'll get this magic push up by the end of the day. If we do, then the hold level is sitting up there in the 116s. So that's pretty much where it's waiting to reject, and then trend resistance is in the high 116s. And then your next trend in the 117s, and then we've got some really big, not on this chart, but we've got some big stuff like 15-day rejection levels, etc., that are up in that 117899 area. So yeah, it really does not look like it's going to go to the moon without some kind of pullback. Looking at the 2-day, so 2-day is going to probably break its interior uptrend, hasn't hit its range trends, hasn't hit the exterior trends. It would have to come down a bit more to really cause any major structural damage. It may just open sort of where you see it now, and then have a dive, and then go back up again once it finds some kind of support. So it's all pretty much confluent with either 114 or a backside. You probably get a backside retest or something off a level like this, which is about 112593, something around there. Okay, so the 3 days could create a hold level it's right on the fence. Like a lot of these time frames right now, they're just keeping everyone guessing. So 115,300, I think is the 115,300 is the level here. If it closes below that, then it could just reject almost immediately, actually, and then try to break the trend. It's not technically breaking that. Yeah, it's not technically breaking that downtrend because it's right on the line. So this could actually still perform a slight upwards move and another push back up to trend because of the hold level that it's digging into here, but it's all single candle stuff, and single candles are generally consolidation. So don't really have to worry too much about this time frame unless it goes below 110, in which case it's going to break the break level of the actual proper 3-day range that's back here. And if it has some kind of big push up off the trend, then this trend rejection is still there at 116,800-ish, and then the next level up is going to be the hold level up here at 119,239. So it could have a push into that, but still this is looking pretty bearish, and it's got something running through here, something old. Yeah, it's got another trend that's running through here, which has been hard closed, not in this 3 days, but the previous 3 days, and that's down here about that 113 area. So it wouldn't surprise me if it came back to retest that even, but a lot of this is just consolidation. So the 4-day has swept its trend. It may create this interior, but as it currently stands, it would open on the wrong side of that. So this is pretty bearish. Like if it opens on the wrong side of the trend and creates this 115,870 hold level, and then just bounces off that trend, and then it can just keep pushing down. The bottom of this range is about 108,300, so that's pretty low down. But it's got multiple reasons. It's actually just got reasons to go down anyway, because you've got a hard close in the previous 4-day candle, and you've got the range trend that was hard closed down here at the 113 area. So a rejection off that down to the 113s, maybe even just a retest of the bottom of the range, which is 112,600, because it's come back into this range. So there's no reason why it doesn't go down and retest the fact that it's back in the range, which would get you into the 112s and then come up from there. And on the 6-day, we may close yellow. If it does close yellow, it shifts resistance trend to the top side. That means anything, once we move back anywhere near those 117s, then it should reject all the way down to these 111s, or it needs to find support somewhere in there. It may find support on the trend, which has got confluence with that 112 area. So you may be waiting to say long this hold level down here at 111,647, but a time frame like this could actually go up, reject off the trend, come down, find support on the trend, and that support would then be more like 1112 something, and then it could push up from there. So it's it's looking like everything is actually ready to be bearish. Okay, 8-day. So this might get a little wee interior trend forming, but looking at it, it could quite easily just open on the wrong side of that trend, and then still has the ability to push down. You may get a little temporary bounce off the other trend, but it's still held in by the downtrend. So yeah, it's looking, none of this stuff's looking very good. And so the 11-day, this one interests me because it matches the structure quite nicely. So the older resistance trend is going to shift to the top side, and so these older trends tend to be some of the stronger ones. That sort of means if it goes back up into that 118 area, it could reject all the way down to the hold level that's down here at 112. 821. But it also, the reverse of this is that if it actually opens next week and goes down, we get some tweak dump or whatever, and it goes down into that 112,800 area, then what that actually means is we have an untested trend target for the hold. So down into the dump, find support, push up into the pump. So this would be quite a decent move to catch. Then 12-day. So 12-day is going to create a new range trend. It's going to be on the wrong side of it. It's going to create an interior downtrend. It's going to be on the wrong side of it. It's going to have a hold level created at 112523, and it's going to bounce between this. So this is, again, confluence of maybe a push into that range trend. I mean, they could play this a few different ways. They could push into the range trend on this time frame, come down to the hold level, which is the hold level on another time frame, which then can push the price up higher beyond this resistance. So it's but one way or another, these key levels, they match the liquidity chart. They're matching where they're shifting the trends to. So we're going to see, some stuff get nuked, both top and bottom probably. Okay, 22-day. This is very bearish. It's looking to create a topside range trend, but unless it actually closes today over 116614, it doesn't have a hold level. So that means the touch of that trend can give a rejection. And this is where the lower time frame stuff starts to come in. So this candle here in June was the hard close of this range. These candles never actually touched that. They never did the retest. So they stopped ever so short, and it might only be, $140 or whatever, but it is still not a retest. So, this time frame actually could send the price down, to that 107 area, just simply to do a retest of the untested range that's down the bottom there. Now, the thing that might save it would be this interior trend running through here, which is not hard closed, but can still provide support. So that would be a trend somewhere in that 111 area. So, and that could bounce it back up. So it really depends which way it travels first. But there's just so much bearish structure on Bitcoin. Okay, and then just to be super confusing, you go one time frame up and you might get a hold level. So if anyone is really confused right now about, why price is just in this weird holding pattern, it's because some time frames are just looking like they want to dump and other ones are looking like they want to try and save it. So with this, if we close above 115003, then we get a 24-day hold level, but we also get a rejection trend up here at about 117. So this could trigger a pretty quick move down and up because we're quite close to where the hold level would be. So you could just tap that and then travel up to the top side, hit the trend, and then as you can see, there's a lot of resistance up inside there. So whether that then triggers the next move down, it's hard to say, but the other side of this is that it actually goes up first, and it could be on the wrong side of the support trend. That would be relatively bearish because if it approaches the resistance from the wrong side of the support trend, spends too much time up there and ends up away from the trend, then it can obviously come back down and dump. But there's one untested level here at about 106,421 that is going to get hard closed by the close of this candle. So that as a level, that level basically warrants a retest, and it's all about how long it takes to do it, because if it does happen and it comes down to this 116 level, it's about how fast does it go back, because all you need to do is close one 24-day period anywhere inside this this trend and the previous trend, and then you're going to head to the previous trend, and that's when those sub 100k levels start to appear. So And as we get up, what you'll start to notice is things like these higher time frame trends, which we're going to close under today. None of them have been hard closed to the upside. So, if we close down here in this 115 area, we can reject off these topside trends. There's a lot of confluence around that 116,800 number, and that would be a rejection off the backside of this interior trend. The hold level for that is, 86K, so that's pretty much down there. However, there is a hard closed break level at 112, so that could support it. And also a range trend running through, which would be sort of around 98, so that could support it. So it may not come all the way down to the front side of the range. It hasn't technically lost the support trend, but it's certainly in a pretty dicey spot where it's closing under resistance. It's got confluence with the lower timeframes, and it's a pretty big fall to come down to some of these support levels from here, just based on the way it's been pumping over the last few months. And 44-day looks like it could close under trend. Same thing applies really. Reject off the backside of the trend. It's got an untested level down here at 106. It's got a hard closed untested trend retest down at about 104. It's got a support trend and a front side level, both down around 100 to 96. So these are all levels that, really don't ignore them. Make sure you're careful with where your liquidations are. And we're not hard closing basically anything. We're not. So when it gets into the 66-day, just to put it in perspective, when we had the 66-day trend form on the upside here, and this is back in January, we dived that trend from 80, where would it have touched? About there. So we dived it from about 93 all the way down to 74 before it bounced back up again. Right? So these timeframes are big. If we open even on the top side of that trend on this next candle, which we could, all that lower time frame stuff could send us lower. And you've got, say, the trend that has not been hard closed, the interior trend down here at about 102. The backside of that could bounce. You've got 93,570, which is a definite, that's a hold level. You've got a proper range, you've got a hold level that could bounce. That would bounce, actually. I'd be long in that. But that's all in the scope of it could happen in the next 66 days. And while everyone capitulates and thinks the bear market is on, it bounces off these levels and actually travels back up again. So just like it has done previously. So 88. So the 88-day, I don't think is a proper range. No, it's not. It's not a proper range. The candles are too big. So this is just looking at a trend. It's going to probably open on the wrong side of the trend. We all know what that means. So we'll probably see some kind of rejection on that. It could push back up a little bit by the end of the day. And this is where, you make these videos sometimes, and then in the last 15 minutes of the day, the whole damn thing flips. So this could push up. If it was to get up over that sort of 116, to be clear, it would have to probably be, funnily enough, over that 116,800 level. That's a very key level. If it closes up over the top of that, it could bounce off the top side of that trend and go to the moon. So I guess we'll wait and see what happens in the last bits of the day. And the biggest trend we have at the moment, which is the 132-day, it looks like it's probably going to open on the wrong side of that. And could probably verify that on the daily. Yeah, it's on the wrong side of that. So if this did push up into that 118 area, it'd be running into the backside of that trend. That wouldn't necessarily be a great thing to be running into. So I think And we do have a weekly close. So this one, we've got the range trend that's running through here. As it currently stands, it looks like it's above an older trend, but it's below the range trend. It's below the exterior downtrend. Everything in this just looks like a rejection. To be really bullish, funnily enough, there's that number again. It's got to get back up into that 116, probably 116,500 for the close. And that would not be a hard close, so it wouldn't guarantee a push up, but at least it would be in a position where it's opening above the resistance. But as it currently stands, it's where it is now, it's below resistance. It will create some kind of interior trend if it closes blue, which will be like that, but then it can open immediately on the wrong side of that, which just creates more resistance to the upside for it to reject off and travel down. So, you know, the weekly looks really bad. All the other time frames look really bad. I said in yesterday's video, we needed a push or a pump, and we needed to close at higher levels if we wanted to, not be flipping a whole bunch of resistance to the top side and making for some pretty nasty looking Bitcoin charts. But unfortunately, we haven't had that. We've got an hour and 47 minutes. If it pumps, great. If it doesn't, get ready for some lower entries really, and be really careful if you're in high leverage longs. All right, SOL. And SOL looks pretty bad. So on the daily, if it closes below 238.455, it's creating another hold level. It's going to shift the trend, but without a wick on the bottom of that candle, it's going to immediately open on the wrong side of the trend. If it does that, then it can just go up and reject off the backside of the trend. Doesn't even really have to go to the hold level. It can just reject and it can travel down. It's still inside the greater range. So 231 is the break level of the greater range. If we lose that 231 level on the daily, a close or a hard close under that, then the next range is a long way down. So there will be backside support and all sorts of things kicking in once you get into the 120s. There's tons of trends through here. It's actually really hard to know where you would ladder your entries in on SOL because there's just so much support. It's got a huge amount of support levels. I think just to put, where's this? Bullish trades. Okay. These are, as you can see, these are all support levels, untouched on SOL. There is tons of them. Okay, so it's, oops, wrong screen. Knowing where to get your entry is the hardest part, basically, on SOL if it starts to dump, because there's so many levels it could bounce off, and we can kind of tell that if it keeps closing candles without wicks on the bottom of them and just keeps on breaking the next trend, the next trend, the next trend, then that's not going to be your entry. If it gets to this trend that's on the bottom side here, has a bit of a bounce, comes back to the trend, closes with no wick, and then goes down from it, that's about the only way you're going to be able to tell. You can just run a downtrend like this. Is probably the other way. You cannot reverse the price and go back up unless you hit a break level. We don't really have any one-day break levels yet in this downtrend, but you could probably look at it on, say, a 12-hour, and I'd say you do. So yeah, you're going to have a break level here at 241.710. So if it doesn't touch 241.710, then yeah, it can't reverse. You got another 12-hour break level up here at 248.447. Likewise, if it doesn't touch that, it cannot reverse. So basically, you just have to follow the trend, and once the thing actually shows the proper signs of reversal, then just put that back. I want to move that when it actually does change. Once it shows the proper signs of reversal, at that point you can basically enter into some kind of trade. Could it reverse here? Yeah, it's possible. it could bounce off the backside of the trend and travel back up. Is it probable? Not really. There's so much stuff that just looks like it wants to have a bigger dump than what we're seeing here. So, 2-day, well, guess what? Looks like that's going to break trend. Doesn't have a wick on the bottom. Trend will shift. It'll be on the wrong side of trend. Yep, you could get a pump back up. Could retest the broken trend, but realistically, it's not looking good. Looks like it wants to go down. Okay. What you don't want to really see is you don't want to see a daily close below 234.242, because if you do get a daily close below there, then you're going to create a hold level at quite a low price, and then it could just drop. So the 3-day time frame is not losing trend. It's one that could generate a pushback up as long as it doesn't close below that 234.242 level. So yeah, we'll keep an eye on that one. Okay. The 4-day is going to introduce a new hold level here at 242. So that's just more resistance, makes it pretty hard to get back up, really. It's also closing underneath a range trend, a very old range trend from the very bottom of the move. So that's not good. That's bearish, very bearish. So could come back up, test the backside of the trend, could test the hold level. It is only a single candle, it's not a proper range, so but it needs to find some kind of support for it really to go back up. One of the old levels from back here in December of last year is this 228 level. So 228 is actually a target for one of the 2-day shorts that's in play off the exchange at the moment. And so it could go down there, complete that short, bounce back. So that's a possibility. 228 is definitely an area I'd be looking for a reversal. Probably a very bullish area to look for a reversal, but still it is. Okay, 6-day is in full-blown rejection from all its levels. It's going to shift. Actually, it can't shift that trend to there, from there to there, so it's basically just going to go down. And if it continues to reject, it's probably going to come back to the trend, which is around this 227 level. If it goes for the deeper retests on this, which are entirely possible, then pretty much you'd be looking at somewhere around that 214 level. So that's another level I'm very interested in seeing if we get down there. Okay, 8-day. That's rejecting. Target support for that all the way down there, about anything from about 217 through to 214, unless it hits the trend first, which could be about 219, 220. Okay, 11-day looks like it might open on the wrong side of the trend unless it pushes up a little bit before the end of the day, but that's still just rejecting. And this is an origin level rejection, first touch origin level rejection of 243.8. So this is a pretty capable of actually having a pretty big move down. Although there is a range trend that it's going to close above, so that's going to give it something in that 228 area. So trying to figure out which one of these levels it's going to reject from or find support in is actually quite tricky. Then we have some more trend support at about 220. I wonder why that alert just went off. Still dumping. And 225 to 228, possible trend support, but still not looking too flash. Some of these bigger time frames are actually looking a lot better on SOL than they do on BTC. So 24-day, it's all around the 220s is where it can potentially find its first support, unless they just keep ramming it down in the next hour, and it looks like that's what they're doing at the moment. So 33-day, yeah, about 219, unless it bounces off the trend, which it could do, open up, you know, around this sort of price, 228, 219. And it's not till you sort of get to these 44-day moves where basically it could do a retrace back to the break levels, which is about 204. I mean, it could go all the way out to the other trend or back to the trend, which is more lower, but there's too much stuff in between for it really to do that in a single pass. I wouldn't be waiting to get an entry that low. You'd be better off taking the bounces that happen in between. You know, 66-day, 216, 220, somewhere in there. You know, it's rejecting off break levels. So it could go and retest these break levels though. So just 243. 243 would be a retest, potential retest area as well. 226, 204, 179. So some of this big stuff is pretty big. Now, weekly. So the weekly one's a bit tricky. There's two different potential anchor points for the weekly trend. So depending on whether this area up here was classed as a blow off top and a flush of the 2021 cycle, or which would indicate that the trend actually anchors from here back in September 2021, or whether that is actually the top and the trend should be anchored off there. So when I look at this, what I see is I see that we went above, came down, and bounced off the backside of this. So I actually have a better feeling that that is the correct anchoring point for the trend, and that all of this was the deviation, because typically this is what you get at the top of a market. It goes up above it, it's all euphoric and all that kind of stuff, and the last of the big players' bags are sold out, and then it dumps. So I actually think that is probably the right trend. Now, unfortunately, that's a little bearish, because what that actually means is that we are rejecting off it, and what will happen today is we will create some kind of interior uptrend like this, and if we close at these lower levels, then we're going to open on the wrong side of that trend. We're also potentially going to be back under this level, which is the 137,500 level. So this is the origin level on the weekly. If we close back under that, we may not even get much of a retest. We could just hit the backside of that and dump. But, and here comes the little glimmer of hope, this will be back up inside this range trend, which is the oldest range trend from the start of the bull market. And it is the one that when we retested and bounced off the first time took us to 295. It is the one that retraced the entire Trump dump. So when he did whatever the heck he did and the price just went all the way down to there, it ended up retracing back up to the trend. Sure enough, we lost it afterwards, but you know, that's just life. It's the one that created this rejection here from 218 all the way back to 185. And we are above it now. So if we lose this uptrend and we sweep down to this, which would be about that 224 level, that could be enough to send this thing, you know, up, back up through everything. So those are kind of the levels I'm thinking: 228, 224, 214, and then below that probably 210, 204, and then down to maybe 189. There is a huge amount of support at 189. But I think 189 might be something that gets left over for some kind of dead cat bounce in the future. So yeah, that's where we're at. It's looking pretty bearish, and unless it changes in the next hour and 32 minutes, the resistance is all moving to above the current price, and probably going to see some kind of pullback. I hope I'm wrong. be nice just to be in a real up-only market. The interesting thing is that a lot of this downwards pressure that's been happening so far is getting absorbed, so people are buying it. So it's a case of there are positions being built. There will probably be one last pump, one last move, but it's just you know, where do you get your entry, how greedy you are, and try not to get liquidated before it happens. All right, let's have a quick look at some of these others. SUI showing great strength relative to, you know, some others, but really not going to do anything on this until next month. See if we get a monthly close above the hold level, unless we get all the way back to these trends. If we do get back to the, you know, 3.25 or 2.8 levels, then it's probably just so worth taking a buy on it. So I'll just take a buy. NA has not hit the daily hold just yet. It's quite a big dive of the interior trend, so if it touches that daily hold, it could easily come back up to that trend. So it's probably, might open an ENA trade. And SUI on the daily looks like it's going to build a resistance hold level. Structurally, this is basically very similar to SOL, except for one thing, and that's that it's actually got better wicks on the bottom from the looks of it. So if it's, yeah, so it looks like it wants to find support better, sooner, if that makes any sense. World Liberty Finance, well, that's done its thing. So closed above the break level, bounced off the break level, it's hit the range trend. I'd make sure that you probably take some profits off the table on that at this stage. It could open underneath that range trend and then have a retracement back down. So yeah, take something off the table at least if you're in that trade. And then the next target level, if it closes up above this range trend, the next target level is up there at 2683. So this is kind of what I mean by it's a very selective market at the moment. There seems to be a rotation into certain things and not others. So it's definitely a weird alt season, that's for sure. Going on. ZEUS still deciding if it wants to die. Looks like it could open on the wrong side of the trend. If it goes down a little bit more and makes a hold level, then it's really dead. If it opens on the back side of the trend, it might just do a liquidity sweep. And if it gets to 5 cents, it's almost just tempting to long it anyway, just because that will be the first touch of this reverse range trend. And the chances are it'll bounce back up here. So that could be a 100% move if it dumps all the way down here. Cook is moving trend today. Might open above that. If it does, that could pump back up. So that's, yeah, that could come back up, test that top side. Surprise, surprise, hype died. So it looks like this is going to be back underneath the global resistance. It is creating an interior uptrend on the weekly. It's going to be on the wrong side of that. It's going to be on the wrong side of the resistance. Only saving grace is it's still technically above the break level, so it could bounce off the break level, spend 1 week in accumulation, and then it could go up. But at this stage, it's looks like a liquidity sweep. All the hype about hype, all the shilling and all of the ball posting, that's kind of what you get. So it's it may go up. Still, I'm not even interested in taking a trade on this until it actually hard closes a proper level. Stays holding up well. Next month trade, as long as it holds up. I mean, if it has some kind of epic dump, if the entire market has some epic dump and it comes back all the way down to this hold level at 21 cents, then it's worth a long. But at this stage, it's just a very strong looking structural token, this one. And I guess maybe people aren't talking about it so much yet, but it looks like it's yeah, it's not breaking its break levels on the monthly, and it's creating hold levels, and it's not even using them, it's just going up. So I'd say at some point this is going to come back to retest this range trend at about 45 cents, almost certainly, but it might just be next month. So it could create the hold level, bounce off the hold level, and then travel back up to these upper levels. So I think there will be a good trade on this. Let's just get it at the right time. And I think that's it. Yeah, that's us for today. So it's a real long one just because there's a lot of closes, but unless we see a massive pump in the next hour or so, yeah, expect there to be a decent flush coming, and hopefully I'm wrong and everything just goes to the moon, and all the shillers and alt season callers can be right, and yeah, we'll see how it goes. Cheers, bye.